there's a big debate, a raging debate over cryptocurrencies, which is, what are they really? You know, are they, you traded currencies for the better part of your career.
Yeah, they're not currencies, which is a...
They're not.
They're not. Currencies...
Well, at least we've resolved that.
We've resolved that. Currencies need to be stable, right? As much as I spent my years, you know, hours, weeks looking at dollar, yen, and the euro, when you step back and walk away from the screens, dollar yen has been plus or minus 15% for much of the last 15 years. The euro the same way. And on any given year, this is the biggest year the dollar's moved 10%. And so for something to be...
Bitcoin dropped 30% in 2 weeks.
For something to be a currency, you need stability. Right, I'm not going to buy this glass one day for $1 and it's going to be $7, you know, a week later. And so when I think of Bitcoin, I think its use case really becomes digital gold. It's a store of value. Like,
okay.
we don't buy and sell in gold, nor do we do it in Google shares, right? I'll buy that suit for half a Google share, right? No, but you could, I'll say, you know. And so I think people get fussed up around Bitcoin as a currency. It really is going to be a store of value. And there's, you know, it's a limited supply. One reason also, currencies, limited supply currencies never work. They're too easily manipulable. They squeeze up and squeeze down. And so I see Bitcoin going much higher because there are very few of them and lots of people are going to want to buy them because it becomes just a store of value.
How high?
You know, the hard part about speculative fevers is they can really go to places you can't think of. So if you think about 1999, we didn't have these things. And what's interesting about a cell phone is that it gives everybody on the planet access to participating in this ecosystem. In 1999, during the tech bubble, if you were an upper middle class Korean or Taiwanese or Indian, you couldn't buy Cisco or play in our stock market. Everybody on the planet can play in this. So
you're making it sound to me as though you buy into the Metcalfe's law evaluation for Bitcoin or cryptocurrencies, that it's the, you know, the value of the network is the square of the number of the participants? Is that, I don't know. I guess I'm asking you, what valuation models apply to cryptocurrency?
The way I think about Ethereum valuation, to start with that, is I look at Ether as a commodity and think of it as fuel. And you need a little bit of fuel for each calculation that gets done on the Ethereum blockchain. And so if I think of the future and how many calculations get done on these things, how many transactions, and I multiply that by a little bit of fuel, the market cap should be the net present value of the discounted cash flows. And so what will constrain the price growth is how fast the network can grow. And so both the Bitcoin blockchain and the Ethereum blockchain have big issues with speed at this point. Now, the bet you make is there are a lot of smart people working on that problem.